Okay, this is the first lesson for cost accounting, counting 319. This is the lecture that should have been released on Monday. I'm sorry that it's late. I've recorded it twice so far and it hasn't worked. I'm hoping this works this time. So I'm a little behind. Again, I'm sorry. So let's get right into it. Also, this will be a little short because I want to make sure that everybody can use this properly and everybody is comfortable with it. So this meeting will be a little bit shorter than the other meetings. I just want to see how your reaction to it before we move on. Okay, so let's go get started. First of all, some of you have expressed um, a problem that you guys do not have the textbook. Either you transferred in, and this is the first course you're taking, or for whatever reason. I have a copy of a PDF of the entire chapter 14, which I will put up on, which I will put up. I have a copy of chapter 14, which I will put up on Canvas. This version is 7, however. So the version that some students are going to use is 6, and the students that don't have access to version 6 will use version 7. It's the same thing. Um, the same questions and everything, but it's just a different version. I do not have access to 6, so therefore I can't give it to you. But this is chapter 14. The reason I'm not giving you the whole book is because I don't want the other faculty to get mad at me for giving you the textbook. So I'm going to give you only the textbook that we're going to use in class. And this is just a real quick look at it. The second thing I want to talk about today is the syllabus. Okay, the syllabus is not ready to be released yet, but it will be. Again, the course number is 319. You may have to have taken and get a satisfactory grade in 270, in accounting 270, or take this class or an equivalent. There's my name. The textbook that you're going to be using is the 6th edition. Officially, we're using the 6th edition. But again, if you don't have access to the 6th edition for whatever reason, I can give you the 7th. We'll be following the American with Disability Act. Anybody who has any kind of um, needs, please come forward and I will honor all needs as long as they're reasonable. Here's the course points. We're going to be covering chapter 14, Managerial Accounting, chapter 15, Job Order Costing, chapter 16, Process Costing, chapter 17, Activity-Based Costing, chapter 19, Cost Volume Analysis, chapter 20, Incremental Analysis, and chapter 24, Standard Costing and Balanced Scorecard. Here's the way your syllabus will look. I will tell you the date of the release of the video. I'll give you an approximate length, what the video is going to cover, and this is information about all our discussions so you can follow along in the class if you want to. If you have any homework, that'll be divulged right here. I did have homework originally, but I'm not going to make you do it right now. We're going to move that till next week. Then as each class has its own system like that, so you can actually follow along in the book if you want to. As I said, after a test, WebEx is required because I want to go over the test. And I want to make sure I covered everything, so attendance in those meetings is required. Okay, so let's get to the topic. The book is Accounting Tools for Business Decision Making, 6th edition, Managerial Accounting. The chapter outline is identify the features of managerial accounting and functions of management, describe the classes of manufacturing costs and the difference between product and period costs, demonstrate how to compute cost of goods sold, and discuss trends. So we're going to be going over this right here in this lecture. First thing I want you to know is identify the features of managerial accounting and the functions of management. Managerial accounting provides economic and financial information for managers and other internal users. I need you to write that down. You need to know that for a test. And I'll give you some time. This is testable information. Now keep in mind, all of you are accounting majors, and that essentially is what accountants do. Accountants provide information. So if you're a financial accountant, like you did in your first class in accounting, you're providing information to outside parties of the company. If you're a managerial accountant, you are providing information to your coworkers and other internal users, people that are internal to the organization, people who work for the organization. So what I did was, I was CFO of a manufacturing firm, Dairy Care. One of the first things I did was to go to each manager who I had to provide information to and say, what information do you need to do your job, and how do you want it to be presented to you? This was important because my customers were the other managers and other internal users, and I needed to know the information they need in order to do their job. Whether I'm successful as a managerial accountant, whether I'm considered successful as a managerial accountant, depends a lot on the other manager's ability to use my information to make decisions. Now, I'm not making decisions for them, but I'm giving them information to make decisions and teaching them how to use that information. This is extremely important. This is what a managerial accountant does: provides economic and financial information. I would definitely write this in your notebook. Okay, moving on. By the way, I will make these slides accessible to you on Canvas. So, comparing managerial and financial accounting. This is illustration 14-1 in your textbook, page 14-4. Okay, so a feature, primary users of the report. So remember, I said that accountants provide information to certain people. Financial accounting provides information to external users like investors, creditors, and regulatory agencies. Managerial accountants provide information to their coworkers, the other managers in the company, and to other internal users. So the primary users of financial reports for external or financial accounting, think external, are external users, stockholders, creditors, and other and regulatory bodies. For managerial accounts, it's the officers and managers of the company. Types and frequency of reports. Financial accounting is very fixed. We report in something called a financial statement, which is a balance sheet, income statement, statement of cash flows with notes. And it's usually done quarterly and annually. Managerial accountants, think internal, provide information as needed. So back to Jerry here, I would provide the managers on a weekly basis. I had what was called a weekly management report for each manager. And I would have somebody or myself provide that information, collect that information and provide it to them. So they got it on a weekly basis, not on a quarterly basis, because they need to make decisions about the company now. They need to make, and these decisions are based on, are like, should I produce more of a product? Should I stop producing a product? Should I increase my market share? Should I increase my advertising? Do I need to apply? Do I need to hire more employees? All those are the types of reports or the types of information managerial accountants provide. The purpose of the report is, for financial accounting, it's very broad, very general purpose. For managerial accountants, it's very specific. They need to make a specific decision. They need to know a specific item, and the report detail is very specific. For example, how did production, again, another example is how did production do? Did we stay on budget? Did we not stay on budget last week? Did we earn a profit last week? Did we not earn a profit last week? Did we ship out all the product that we wanted to ship out last week? All those will be reports to specific managers that a managerial accountant would provide. Continuing, the content of the reports. So financial accounting, the reports are very broad. They pertain to the business as a whole. They're highly condensed. I give the cash for as you remember, the balance sheet shows the cash for the entire organization. The accounts receivable for the entire organization. The accounts payable for entire organization. It's limited to double entry accounting, and accounting and cost data are very limited, and I have to follow generally accepted accounting principles, GAAP. Managerial accounting pertains to subunits of the business. So I might use the manager of manufacturing manager, give him or her specific information relating to manufacturing. I might give the shipping manager specific information to shipping costs and who got their goods and who didn't. It's very, very detailed. Does not follow double entry bookkeeping in any way, and there are no standards. In the financial accounting, we have generally accepted accounting standards. You can do in managerial accounting whatever you want. The verification process. So in financial accounting, there is an independent auditor who comes in and audits my books. There is no independent auditor of managerial accounting. You can tell whether or not you're doing a good job by the quality of the decisions that the managers are making. The managers you are providing are making. The managers that you're providing information to, the quality of the decision that they're making. So let's go through a little exercise. Okay, so the primary users of reports for both the financial accounting and the managerial accounting. Kind of think to yourself, I'll give you a couple of minutes. Think to yourself as to who the primary users of reports are. If you don't know, look back. This is extremely important. This is also very testable. What are the types of reports that are prepared by financial accountants? What are the types of reports that are prepared by managerial accountants? Obviously, we'll go over the answers in a second. How frequently do financial accountants have to provide reports? How frequently do managerial accountants have to provide reports? What is the purpose of a financial accountant providing his or her report? What is the purpose of a managerial accountant providing his or her report? What are the contents of the report for a financial accountant? What are the contents of a report prepared by a managerial accountant? And what is the verification process for a financial accountant? What is the verification process for a managerial accountant? Okay, so for primary users of reports for financial accountants are external users, stockholders, creditors, and regulators. For managerial accountants, it's internal users, officers, managers, and coworkers. The types and frequency of reports are financial statements are prepared by financial accountants, and they are prepared quarterly and annually. Managerial accountants prepare internal reports, and they're done as frequently as needed. As I said, I used to prepare weekly reports. Some reports were daily, depending on what the information the manager needed. Purpose of reports. They're very general purpose when they become financial accounting. When a managerial accountant prepares reports, its specific purpose is for a specific decision. Do I want to produce more units? Do I want to produce less units? Did I earn a profit last week? The contents of the report pertain to the business as a whole, highly condensed, and generally accepted accounting principles are used. Managerial prepare reports that are pertinent to a specific unit or subunit. They're very detailed and they're relevant to making a decision. Verification reports. An independent my auditor audits my financial statements, whereas managerial accounts reports are not reviewed. Again, you can tell on the quality of a managerial accounting report by the decisions made by the managers whom he or she provides information to. Take notes if you got anything wrong. Think about why you got it wrong. Make sure you can get it right for a test. Okay, three functions of managerial accounting are planning, directing, and controlling. This is also a testable item. No, it sounds like everything's a testable item. This is testable information. Okay, think of planning as a budget. You have a plan to do something. Think of directing as what actually happened, and controlling, think of it as I want to fix what I did wrong actually and put it back to the way I planned it. So think of it in terms of you want to go out Friday night with your friends. You call them up at 3 o'clock on Friday and you say, hey, let's go to a movie. You all decide to go to a movie. That's your plan. Let's say instead of going to a movie that night, a you go out to a restaurant to watch the game. That's what actually happened. That's directing. The controlling part of it is you talk about with your friends and say, I really wanted to see that movie yesterday. I wonder why we didn't go and see the movie like we planned. And you take action to make sure to correct that. And you make sure you don't do something different next time. Planning requires managers to look ahead and to establish objectives. So an essay question will ask you to write this. I need you to know this. Directing involves coordinating companies' diverse activities and human resources to produce a smooth running operation. This function relates to implementing planned objectives and provide necessary incentives to motivate employees. I will wait a couple of minutes for you to take notes. Again, you will have access to these slides on Canvas, so you can take the notes directly from the slides if you want, or you can write it now in your own words, or use my words. However you do it, get it in your notebook. Remember, directing is what actually happens. Think about it as what actually happens, the actual production process. How many units did you produce? Planning is I planned on producing 400 units this week, and then the directing is I only produced 350 units. So I planned on producing 400, but I only produced 350. I actually produced 350. This is controlling. Again, this is testable information. Is the process of keeping the company's activity on track. In controlling operations, managers determine whether planned goals are met. So using the example earlier, I planned on producing 400 units. I only produced 350 units. So the controlling function will go back and say, Why did I only produce 350 units? Did my machines break down? Why? So why did I only produce 350 units when I planned on producing 400 units? And then the controlling function finds out what happened and fixes it so that next time I want to produce 400 units, I produce 400, not 350. I'll come back to this in a second. So planning is I want to produce 400 units. Directing is I actually produced 350 units instead of 400. And directing is why did I produce 350 units when I wanted to produce 400? This is answering, controlling is answering the why question. Okay, let's move on. So this is not testable. So planning, maximize short-term profits and market share. So what I'm doing is I'm creating a budget, and in that budget, I'm building in it the best costs I can do. So for instance, If I'm sure that I can produce a unit for $5, produce a unit for $5 each, that's what I'm going to budget into it, and that maximizes short-term profit. And maximization of short-term profit maximizes market share. So that has to work. The planning is what I dream on doing. One of the best possible scenarios. I plan on producing 400 units. That means that I'm going to maximize all the units I can make. I'm going to make all the units I can make, 400. And that maximizing profit simply adds value to the business. This is not testable. So I just want you to listen to this. Directing. Remember, we said directing is what actually happens. So I coordinate diverse activities in human resources to produce the 400 units that I want to produce. I implement the planned objectives, meaning I produce 400 units because I want to produce 400 units. I provide incentives to motivate employees to produce 400 units. I train and hire enough employees, and I train them so they can properly produce the 400 units. And I produce a smooth running operation. The controlling is how many units did I actually produce? Did I only produce 350 units? Why? Determine whether goals are met. Because remember, controlling is asking the question why. Decide changes need to be needed that are get back on track. Okay, so another little exercise on planning, directing, and controlling. So the first one is requires management to look ahead and to establish objectives. A key objective of management is to add value to the business. Think to yourself which one of those are. Is it planning? Is it directing? Or is it controlling? B, involves coordinating diverse activities and human resources of a company to produce a smooth running operation. This function relates to the implementation of planned objectives. Is that planning, directing, or controlling? Think to yourself. C, is the process of keeping the activities on track. Management determines whether goals are being met and what changes are necessary when there are deviations. Is that planning, directing, or controlling? Think to yourself. You can also see this on textbook page 1429, following along in the textbook. So here are the answers. The first one is planning requires management to look ahead and to establish objectives. The key objective of management is to add value to the business. That would be planning. If you didn't get it right, go back to the slides and think about why you didn't get it right. B, directing involves coordinating diverse activities and human resources of a company to produce a smooth running operation. This function relates to the implementation of planned objectives. That is B, that is directing. C is controlling, is the process of keeping the activities on track. Management determines whether goals are being met and what changes are necessary when there are deviations. That is controlling. Okay, we'll talk a little about the organizational structure. Basically, a corporation has stockholders who are the owners of the company. Then there's from the stockholders is the board of directors, and then somebody's appointed president, who's an employee, is the top employee of the company, and then the president uh, has reporting to him the chief financial officer, the marketing manager, all these people. This is not testable. I'm not going to put a test on question on that. Indicate whether each of the following statements is true or false. Managerial accountants have a single role within an organization collecting and reporting cost to management. Is that a true statement or a false statement? Think about it. Financial reporting, financial accounting reports are generally purpose and extended for external users. Is that true or is that false? Think to yourself. Managerial accounting reports are special purpose and issued as frequently as needed. Is that a true statement or a false statement? Managerial accounts have a single role within an organization, collecting and reporting costs to management. This is false. Management accountants do have a single role within the organization, but it's not collecting and reporting cost to manager. It is providing information. It is providing information to other managers and other employees. That is false because it's not collecting and reporting costs to management. They report information. Go back to the first screen or the earlier screen. Provide economic and financial information. Financial accounting reports are generally purposed and intended for external use. That is a true statement. Managerial accounting reports are special purpose and issued as frequently as needed. That is also a true statement. If you got it wrong, go back to this table on 14.1 and look why you got it wrong. But don't be tricked up with number one is not collecting and reporting costs. It's reporting information. Some of that information is cost, but that's not the only thing a managerial accountant does or managerial accountant reports. 18, try these. Managers' activities and responsibilities can be classified into three broad functions: cost accounting, budgeting, and internal control. Ask yourself whether that's a true or false statement. Managerial accounting reports must now comply with generally accepted accounting principles. Ask yourself whether that's a true or false statement. Okay, manager activities and responsibilities can be classified into three broad functions. Yes, they can be recorded into 3-4 functions, but those functions are not called cost accounting, budgeting, and internal control. Those functions are called planning, directing, and controlling. It's not these three. Let me read those out. These are the three. So there is managed activities and responsibilities can be classified into three broad functions, but those functions are not cost accounting, budgeting, and internal control. Those functions are planning, directing, and controlling. Managerial accounting reports must now comply with generally accepted accounting principles. That is false. There are no rules in managerial accounting. No set of rules that need to be followed in managerial accounting. Okay, if you have any questions, email me. Um, and I'll either discuss them, if a lot of people have the same question, and I'll discuss them in a lecture. If not, I'll answer you personally. Have a great day. Again, I'm sorry this is late. I'm planning on getting back, releasing another video tomorrow, and that'll get us back on track. Thank you for your time. Okay, again, thank you for coming to the meeting. We're going to end it now.